Hey guys, let's understand the competitive advantage in the internal cost analysis using the value chain approach. Organizations can use the value chain analysis to understand the cost of processes and activities and identify the source of profitability. The following steps are generally used to carry out an internal cost analysis. First step is to identify the firm's value creating processes. Traditionally, business organize themselves into various cost, revenue, and profit centers. The businesses are also organized on a functional structures with different layers of hierarchy. This type of classification or organization does not help firm to understand the contribution of each activity. The key is to classify activities to understand their true contribution to the firm's competitive advantage. For example, firms might have distinctive advantage in their procurement process or inbound logistics. Clear? Determine the portion of the total cost of product or service attributable to each value creating process. The next step is to trace or assign costs and assets to each value creating process identified. A company might use estimates to assign costs to the value creating activities. The costs of support activities must also be allocated to get a full picture of cost. For example, a new ERP system might reduce the inbound logistic cost with proper inventory management, but would increase the cost on IT front. Unless such costs are identified and allocated, the analysis would not give a clear picture. Many of the processes identified may be instrumental for achieving competitive advantage, right? Identify the cost drivers for each process. The company identifies the factors which drive cost. That means reasons behind occurrence of any cost. A change in cost driver leads to a change in the overall cost. For better understanding of the cost driver concept, watch the video part 8 of this chapter. The next step of internal cost analysis is to identify the factor or cost determinants for each value creating process. Once the factors driving cost are identified, business can assign priority in its cost management activities. Management accounting systems may not reveal the causes or factors for the significant individual cost. The use of a single output or volume measures to assign cost can also be misleading at times. Hence, multiple cost drivers usually provide more useful information and analysis. The companies are using activity-based costing to gain a better understanding of the resources consumed and cost incurred for a certain activity. Clear? Identify the links between processes. The value chain analysis considers individual value activities as separate and discrete. However, the individual activities are not independent and are not expected to function in silos. Most activities within a value chain are independent, and the linkages between the various activities might impact the total cost. The cost improvement program in one value chain may lower or increase cost in another process. Example of ERP taken in earlier stage, decrease in cost of inbound logistic may increase cost of IT. Another example could be an increase in automation might reduce the manpower cost, but would also increase the technology cost. Clear? Evaluate the opportunities for achieving relative cost advantage. Traditionally, firms and businesses have adopted across-the-board cost reduction. Across-the-board cost reduction means cost reduction in all the departments and at all levels. For example, reduce cost under all heads by 15%. Such an approach does not solve the actual problem, as the costs are not reduced strategically. Such an approach might lead to forceful reduction of cost in certain areas like marketing, which might impact the sales. Certain activities might provide larger opportunities for reducing costs, while other activities might require the costs are incurred at current level or maybe even at higher levels. Using the value chain approach, a company goes beyond simple across-the-board cuts and attempts to lower cost and improve efficiency within each value creating process. Reducing process input costs often means negotiating lower wages or moving production to countries with cheaper labor costs. Suppliers might be willing to drop the prices if the company negotiates long-term contracts. Company also use buyer-seller partnership to gain advantages in cost, quality, time, flexibility, delivery, and technology. Understood? Hope you are clear with the concept. Hey guys, hope you have learned from this video. So please like and share the video, comment if you have any doubt or a suggestion, and don't forget to subscribe the channel. Keep watching, keep learning. In short, it is quick. Thank you.